So candlesticks are great, and that's what we're all familiar with. But imagine you can actually go in depth to a candlestick and understand the interaction between buyers and sellers that have happened within each period on a 5-minute candle, a 15-minute candle, and essentially see the real action behind them. The way we do this is by looking at footprint charts. So in this video, I want to break down what footprint charts are, the different type of footprint charts, understand the auction between buyers and sellers, and essentially how to use footprint charts to our advantage. So with that being said, let's dive into it. So here we have the candlestick chart, which everyone is familiar with. Now, when we look at a footprint chart, what we're able to do is we're able to go inside any single one of these candles and we're able to go deeper, right? So I'll take this candle, I'll go deeper, and I'll be able to see, right, all of the transactions happening here. Every single transaction. Now, this looks like a lot of numbers and numbers all over the place. And this may confuse some people, but we are going to understand what this is. We are going to understand a full understanding of footprint charts, the interaction of buyers and sellers, types of footprint charts, and how to use this. So let's understand the interaction first. So you guys see two sides, right? There's one side on the left, right? And one side on the right. Okay. So these two sides, the side on the left is the bid. The side on the right is the ask. Okay. So essentially the market is a big auction, right? There is where the market facilitates trades between buyers and sellers. Now, these are a few things I want you guys to understand. On every single trade, there's usually an aggressor. I'm just going to put AGG. There's usually an aggressor, a participant that wants to be aggressive, be it the buyer, be it the seller. Whoever's the aggressor is typically going in with a market order. They're saying, I'm willing to pay whatever I want for this particular security at this time. So I will be the aggressor. I will go in with market prices. Then you have a passive participant. I'm just going to put pass, who usually goes in with a limit order. These are participants that are passive, and they're very important too, but their order types are limit orders. So once again, we have passive participants and aggressive participants. Aggressive participants are going in with market orders. Passive participants are going in with limit orders, okay? Now, when we look at this, as mentioned, we have the bid on the left and we have the ask on the right. Now, bid, ask. Now, if there's an order for, let's say, 45.85, 45.85, and there's one contract traded, there's typically one participant that is aggressive, either the buyer or seller. The way we see that is by looking at the footprint chart. So when I look at this 0.167, what this is telling me is someone had an aggressive order to buy 167 contracts at this price. An aggressive order to buy, hence why it is on the ask side. Now, if someone has an aggressive order to sell, they're willing to sell to the next buyer. So in this predicament, there was two contracts that were aggressively sold, 266 contracts aggressively bought. That was the transaction type. So when we go deeper and deeper within this, we are able to see that interaction. We are able to see something that is a finished auction, something that is maybe an unfinished auction, which I'll talk about as well. But once again, when we see this in terms of interaction, we're able to see that, hey, 479 orders at this price got filled at the bid. If it got filled on the bid, and I want to ask you guys this, just pause for a second thing. If 479 orders got filled on the bid, who was aggressive? The buyers or the sellers, right? If there was 479 orders filled on the bid, the sellers were aggressive. If there's 975 orders filled on the ask on the right side, that means the buyers were aggressive because the buyers are willing to pay a premium on price. So they're willing to be, aggressive. If sellers are more aggressive, they're willing to sell at a lower price. Passive participants are not willing to buy at a higher price. They're willing to stay at the price they're at, hence why they use limit orders. So understanding this dynamic is the most important concept of order flow. It is the most important concept of understanding the interaction of buyers and sellers. Now, when we have this interaction, our job then becomes to identify the interaction between the candles. Now, as a trader, I'm not looking at every single footprint minute by minute or 5 minute by 5 minute and trying to analyze it. I'm looking at key levels. So for example, I get into a key level, and imagine I get into a key level and we hit that key level, but we keep seeing aggressive buy orders, but market is not moving. We see that a lot of participants are aggressively buying here, but the market is not moving. That means that there are passive sellers that keep selling to them. There's a lot of supply here, hence why we're unable to move. And when that supply is, stays active and the demand dies down, we start seeing it move down. Another scenario could be as we start moving up, the aggressive buyers are no longer there. The volume dries down, which, I'm looking down here. The volume dries down. And as volume dries down, I'm seeing somewhat of a move down. So when you see some of my videos and I talk about I'm seeing buyers in control or I'm seeing massive supply, this is what I'm talking about, right? So there's different type of footprint charts. And like I said, I'm going to explain more concepts. If you're still a little bit confused, just stick through this whole video with me. I promise till the end you will understand, right? So if you're seeing this is a bid and ask footprint, right? So like I said, there's a lot of different type of footprint charts. So on a bid and ask footprint, you have the bid on one side, you have the ask on one side. What do the colors represent, right? The colors are just representing on that line, who is the aggressor. So because this is red, there are more aggressive sell orders. As you can see, 927 on the sell, 531 on the bid, 927 on the bid aggressively sold, and 531 aggressively bought, right? Indicating that sellers were, the traders were more aggressive on the sell side here. When you look here, you have 983 on the bid, 1,000 on the ask. Buyers or aggressive buyers were in control. Hence why it's green. That's the price differential we're seeing, right? Now, going into different type of footprint charts, as mentioned, this is the bid and ask. So I will go here. This is the ATAS platform. Like I said, for footprints, you guys can use ATAS. You guys can use Sierra charts. Just preference, whatever you guys prefer. But this that I'm showing you guys is ATAS platform, right? Now, if I go in here and I want to kind of mess up my settings, I can go and I can have different. I can say, show me the volume. So in each transaction, I see the volume now. If I go to bid and ask, see there's 0 on the bid side, 167 on the ask side. If I hit volume now, I see 167, 1K, 2K, 2K, and so on. I might say I want to see volumes and trades. I can see that. So I can customize this however I essentially want. I can also make this color scheme delta. I can make it solid. I can have none. So if I have none, and I just look at this is just essentially showing me all the interactions, but I can't see the delta. Now you may ask, what is the delta? What do those colors mean? Essentially, if there's 10 orders on the bid, let's say we put B, and there are 20, let's just say there's 30 orders in the ask, the delta here will be 20, right? Because there's a difference of the buy orders and the sell orders, right? So if I go into one of these examples and let's just say put in delta, right? So if you look at this, 0 and 167, if I just make this a delta, it'll say 167, and I can keep this a color. Let's make it a delta color. See, 167 hit the ask, 69 hit the ask. So the green are representing more orders are hitting the ask, hence why it's green, and the delta numbers are just representing that. So if I see a delta of negative 313 at a certain level, what that is implying, it's implying that there were about 313 orders more hit on the bid, meaning aggressively sold. That is what that is representing when I look there, right? And as I mentioned, there's a lot of different customizabilities. One way to look at it is bid and ask profile, right? Just like this. Some people may create this as a delta. Some people may create this as volume. I may have additional footprint of volume just to see where's the volume traded. So if I look here, I get like a clear identification of how volume is trading, how delta is trading. And when I look at delta, for me, what's important, and I just to kind of give you a idea of where and how, I guess, the footprint component is important. If I go into, let's say, put the bid and ask, and I go delta, right? When I look here, I like to see personally what is happening to price action. Right? So if let's say I go up here, what I'll see here as a trader is I'm seeing that on the 5-minute chart, and this is a 5-minute footprint, as you guys can see, and I can adjust this to a 10-minute, I can adjust it to a 30-minute, I can adjust this to whatever, but for this example, I'm using a 5-minute. So if I go into a particular trade, right, I can see where the aggressive orders are, where the aggressive sellers are. So if I look here, let's say we just look at this action, right? Let's just understand this really quick. So if I look here, I can see that on the session, as this instrument goes higher and higher, right? We keep going higher and higher. We go higher, we make a new high. As we make a new higher and higher, on every high, participants are aggressive. Participants are aggressive on the high. Participants are aggressive. Now, as they're aggressive, there's a few things happening with the orders, right? One thing that's happening with the orders, the delta for these kind of 5-minute blocks are staying stagnant. Most of the aggressive buying, or if any aggressive buying, is happening on the upper side. As it's happening on the upper side, what I see as a trader most of the time is I see passive sellers being active, that there's limit orders hitting these levels. That's number one. Number two, another thing I look at as we're going into key levels is I look for something called unfinished auctions. So anytime there's a high or a low made in the movement, right? I look at those levels where the highs and lows are made, and I identify if there is any sort of unfinished auction. So an unfinished auction looks something like this. This is what I want to see as a trader. Not this, not this. If we hit a high, I want to see a 0 on one side, at least, just as basic knowledge, right? Because that implies that, traders are in here, they're aggressively hitting the ask, and there's no orders on the other end. The auction is wiped out, auction is finished. Now, of course, we saw it here, we didn't see it here, and we saw it here, right? So it's not something where every time you see an auction finished, you go and you think the market or the stock is going to go down. The idea is if the auction hasn't finished on a high or a low, there is a probability that the market will go there again to finish the auction. And if and when it finishes the auction, we might potentially reverse. So that's one thing to look at. Another thing to look at, as I mentioned, is to look for exhaustion and look for absorption, right? There are times where we can identify that certain trades are exhausted in terms of the big move. So if I look at this, right? If I look at this move right here, just to give you guys some context, right? We look here, let's just kind of look at the candle, right? We see the market opens strong, makes a high here at 10:05 a.m. Eastern time, comes right back, goes to this high of 45.85. So obviously a key level. Once we come to this 45.85 essentially, and we come into these key zones, I want to look at the activity in these key zones and identify how the activity essentially played out. So let me just kind of look at where and how we can look at these levels. So I go here just to see, right? This is also kind of the low, right? Just to look at the market's intraday activity. And these are levels I want to see. So as a trader, we open up, we have some, tough action going on here. We wick down here, and as we wick down here, I want to see what goes on with the auction process, what is going on, and I want to understand that. Now, when I understand something like this is very important, right? What is going on here, right? There's a lot of things going on, and I want to explain that. So one, we get a very negative delta 5-minute candle, meaning that there were more aggressive sellers on this 5-minute full candle than there were aggressive buyers. When I look at the candle, I see most of the volume is compiling on the lower side of the profile. This is showcasing the volume. Obviously, we have a lot of volume built up here. The interesting thing to me is this action of a candle is going into our massive demand zone. We go into a demand zone with aggressive sell orders, but the passive buyers step in. Now, this is very important, guys. Think about this. Imagine someone is aggressively selling something into a key level. And once again, the key level, key zone is important, but price holds. What this means is that we're getting a lot of effort, but we're getting no reward, right? We're getting a lot of activity, but that activity is not driving any sort of movement. So because this is pushing, we're seeing a lot of aggressive sell orders, but they're not getting rewarded, meaning price is not confirming as it should, that means someone is passively buying. So imagine with like an iPhone, you start selling an iPhone for, let's say iPhones you think are worth $1,000, you sell an iPhone for 700, and you're like, okay, well, if I sell it for 700 and people keep buying it up, and you're like, holy shit, people are buying it up, people keep buying. And as people keep buying, that showcases there's a participant or participants active here, willing to absorb this up, willing to be aggressive. And despite the aggressive selling, someone is actively buying it up. So don't also confuse aggressive selling to market sellers are in control. Yes, aggressive selling, sellers are aggressive, but a passive participant can step in and eat up the orders. And on a footprint chart, you might see aggressive delta, negative delta, that sellers are in control, but they may, the passive buyer may be able to drive the price up, which is what happened here, right? The passive participant comes in and, he or she's able to come in and buy up. Now, some people may say, well, there's an unfinished auction, so price has to come down. No, unfinished auctions are only contingent on lows and highs of the day. This is not the low of the day. The low of the day has been set. So I don't care if this finishes or doesn't finish the auction. What I do care about is when we hit the high. As we go higher and higher, I want to see unfinished or finished auction. So as we go here, see, this is the high of the day, unfinished auction, finish, unfinished, finish, and then we start rotating down. But even when we go into the second level, right, and we start understanding what is happening, we identify these key levels, and you can see as we get to this key level, right, and we look at this, kind of candle. The interesting about this candle is when we look at this candle just as a basic candle, I guess, it's very interesting because we see this rejection. But when I go deeper into this candle, I can see that the most volume happened here. There was not a lot of transactions or activity happening above here or down here. When I look here on this candle, even though the body was here, I'm seeing most of the transactions happen here. So I'm able to see the shift in transactions, and I'm also able to see that with all the volume being here and us getting negative delta, that sellers are aggressively selling, but price is holding. That confirms the move of potentially going higher. Right? We come into this move, which is the second interesting part, right? We come into this move, we start seeing that, for a short-term move, we break this area with strength. Buyers are in control. We see aggressive delta, strong delta, keep going higher and higher. And as we get higher and higher, some interesting things that happen is, the delta isn't moving as strong with price moving up. So as price is moving up, I'm not seeing some real expansion on price movements. I'm not seeing real aggressive buying step in. Price kind of starts balancing out. So it kind of becomes, a big question mark. Now, if price wasn't balancing out and price was moving up and we got strong delta, that's actually a good sign. But, if you look at the delta for each 5 minute, 593, 27 here, we're essentially flat. The buyers and sellers are both kind of confused. We come in here, no real movement. We go in here, no real movement. And then right away, when sellers do take control, we do fill in that high of the day, sellers come in, the delta goes extremely aggressive. We get 4K on the candle. We get a nice volume shift, right? Sellers or traders are in control, not much activity. Second activity gets established, and there's a lot of aggressive selling that is being rewarded, meaning price is moving alongside with it. Then obviously you can see price starts flushing, right? So, I want to leave you guys with a few things really quick. So candlesticks are great. Footprint charts allow us to go deeper. Now, I don't want you guys to go into every single chart and start saying, or every single action and start saying footprint charts are the holy grail. Footprint charts are just tools. Our job as traders to use the tool to our advantage, use the tool to understand the interaction between buyers and sellers. The places and the ways these tools are important, they help us understand where we're getting imbalances, where we're getting, auctions that are unfinished, where are we getting areas of absorption, where are we getting areas of possible exhaustion, right? So where can we see where the activity is happening within a candle? So it gives us this structure. Our job, once again, is to put that information with the context of the market. We never want to look at an individual candle without understanding the context, without understanding the session, without understanding what is happening from a larger, picture, and take trades. So for example, this level 40, 45, 85, maybe a massive level that we have, massive supplies level that we're going into. Maybe we might be into a massive demand level. So our job, once again, is very important to identify these zones, these levels that we're watching, and why we're watching these levels, why we're watching these zones, right? So if I was to just look at this, right, these levels have played a significant role, right? These, you know, even if I go back here, right, even this level, just for context purposes, has played somewhat of a significant role. So going back in history, looking at the significant levels and understanding the context, right, and putting that context together with footprint charts is a great indication of understanding the market. A few tools that are very helpful. You know, you have market profiles to understand where the market is balanced or unbalanced. You have footprint charts just to show you the activity of the auction, and then execution wise, you can just look at the DOM, or even sometimes this. It just depends on what your trading style is. And if you do want to pick up this tool, once again, I'm not saying this is a holy grail tool or it's the tool that everyone needs. You need to know where and how to incorporate it within your trading, and you need to know what you are looking for. So before you even go into applying this rule, just understand the auction a little bit better, understand how the participants get involved, where they get involved. And guys, trading is kind of like an art, right? Our job is to read what the market participants are doing and why, and create that storyline to get the best possible trades that we can. So with that being said, I hope you guys enjoyed this video. And if you got up until this long, I'm sorry for, you know, delaying uploading this video. I've been wanting to upload this video for a really long period of time. And if there's more topics you guys want me to cover, just comment down below and I'd be more than happy to talk about more things that you guys want to hear from me. And once again, thank you so much for tuning in, guys.